My name is Tunji Adeni. I'm CEO designate for UBA. I just want to congratulate KenolKobil for this very good result and the transparency behind the presentation. As a Pan-African bank, we also know the issues that are involved with the exchange rate losses. And I wish we could be allowed to maybe present a proposal to help you manage the exchange risks, because we are located across the whole of Africa. Also, I want to make an observation, which was also raised by the chairman, chief executive, that the shares of KenolKobil is actually very undervalued because of the very low price earning ratios. So I therefore want to commend it to investors that it's going to be a good buy. Thank you.
Good morning. I'm Vinay Datta from UBA. My congratulations to KenolKobil, the whole team, for the excellent results. I have a question. I have observed fuel oil is one segment that has been added in 2011 performance. It has come out very significantly in terms of growth contribution in turnover as well as in the contribution segment, while it was almost negligent in 2010. Is it one-off kind of situation, or it is something that deliberate plans for the company to push in the subsequent years?
Okay, I'll respond to that question, but I want again to urge all of you, take the opportunity. We don't meet so many times in a year, so, you know, raise questions and challenge management. And I like the observation that it's a very transparent, and yes, this is our style, and all these presentations will be uploaded on the website. So everything will be accessible then after for all of you. And as I said, this all presentation and meeting discussions will be on YouTube. That's our style, and that's the way we want it. Just go back to that question of fuel oil. First, I think there is misunderstanding. 2010 was strong as well. Fuel oil has been strong for KenolKobil as a business line for some years. It's not a one-off at all. It's been actually growing over time and improving to the extent that we are probably the biggest, in terms of market share for sure, but the biggest importer of fuel oil. We started fuel oil importation going back maybe 6 years ago, when everyone was relying on one refinery down there in Mombasa. We started seeing the future, and we said, let's start importing fuel oil. David, you want to comment?
Mentioned 2010 was strong, but much stronger in 2011. But not to say that 2010 was low. We just got additional contract, which is Kengen Kipevu 3 in 2011, which is substantial volume. But 2010 was a great performance also for this business line.
Yes.
Hi, my name is Baptiste from BNP Paribas. Just one question concerning the other projects that you have. You mentioned that you were looking at developing some properties. Will it be under the name of KenolKobil, or under you're going to make a complete separate company to develop this kind of project?
Okay. Yes, I did mention. I'll tell you frankly, we are debating at the board level how to go about this property development, and you know, how to take it to the next level. Because what we've been doing currently up to now has been developing convenience stores, shops, restaurants, whatever. around and within the station forecourt. We have quite a number of assets across the group, across the countries we operate, where we can do much beyond it, much beyond the typical convenience stores and so on within a station. And I did mention Ethiopia, even in Kenya, by the way, but Rwanda, Zambia, we look at these things. Now, how to do it, frankly speaking, we have not yet made a decision. At one stage, there were ideas of even kind of spinning it out and having it as a KenolKobil property development, as a subsidiary of KenolKobil, call it for the sake petroleum, KenolKobil Limited. We don't know yet. What we do know is that we are sitting on assets that can be, crystallized into additional value through business which not necessarily we have the full expertise and knowledge how to do it, to be open. We know very well how to develop a small size shopping centers like you can see in Embakasi, Kitangela, Buruburu and so on. But if you go to, much bigger than that, we may need to bring a partner with that expertise, knowledge, and experience. So we are not yet clear about on that, and I can tell you, Mr. Kondo, who sits with me, has been already in touch with some private equity property developers, specifically on the Ethiopian project, where we have about 20,000 square meters in the heart of Addis, where we know that we can do a lot and crystallize amazing values. So we are thinking about it. We are still in process of. I mentioned it because I believe there is upside there which we need to take note of as investors, as shareholders. Thank you.
My name is Reginald from Amana Capital. I wanted to find out your outlook for 2012. Are you able to sustain the same growth levels that you have shown us today? Considering if you look at the disparity between the rise in oil prices and the strengthening of the shilling, there is a disparity. The shilling is only strengthened by close to 3-4% this year. Oil prices are up a bit higher. And knowing that we have a government that is bent over making fuel pump prices cheaper, irregardless of the costs, and you guys being in a low margin business, also looking at interest rates are not going to really moderate that lower this year. So you're still going to be having a high interest rate environment. That's the only way they can keep the shilling up. So again, we're seeing a hit on your interest expense. Then on the shilling itself, the shilling will weaken at a point in time. It's at unsustainable levels of 82. With the focus of 86, 87 by the end of the year, you might also have an increase on your Forex losses. So are we expected to see the same growth level, or should we start preparing for reduced growth in terms of your bottom line this year?
You know what Pat told me just now? She actually didn't tell me, but I was, overhearing her saying, great question. It is. It's a great question. Now, let me tell you, I'll respond to it in the following manner. First, the same growth rate would be very challenging, very difficult, because you're talking about 60-something or whatever percent growth, for sure not. Whether we foresee in the coming years and in 2012 growth, yes, we do, from that level. Whether it's going to be easy, I can tell you for sure it's not going to be easy. And you mentioned some of the challenges on the exchange, interest rate. Oil prices, I'm not so sure are the main challenge here, because I think we have gained sufficient experience to handle and manage the oil prices fluctuations. And it can sometimes become an opportunity, just to let you know, without going much into details. So that's not my worry as management. I'm more worried on the other issues you mentioned. But what do we do in order to maintain this strength and growth in the coming years? As you can see, we are trying to develop certain, business lines where we believe there is a great margin per unit, where the risk is limited, where our pricing is determined by us, or the pricing is determined by us, not by governments. And it's a fact that we are operating in most countries where it is regulated and pricing is regulated, but not in all products. So we watch other products where we know we can determine the price, and we can, of course, subject to market forces and competition, of course, we all know that. But we know we can realize better margins, and the products are well mentioned there. I don't want to go into it, but I'm sure you notice fuel oil, LPG, lubricants, non-fuel, exports, trading, bitumen, you get me? So we develop these platforms to make sure, first we have the retail, commercial, and so on, which, on pricing issue, they are more determined by the environment or the regulated environment, but we develop additional, layers which are more in our control, and develop that strong platform on which we can continue expanding and moving into new markets. The new markets give you, of course, additional margins, additional volume. It supports the whole group. I mean, without growth in, let's say, geographical growth, we wouldn't have been able to eat 3 million cubic meters. But with the new assets coming on board, like, for instance, this Lubumbashi, like, for instance, this hub that we are developing in Bujumbura for Eastern Congo, we will increase the volumes, will increase the capacity of the whole group that will support the trading business, will support the lubricants, will support the LPG, the fuel oil, and so on and so on. Do you get the? So, to summarize, I'm very optimistic. I know we are going through a difficult time, especially with the Kenyan shillings. It's a fact. Let's face it. I've not seen, and I'm not as young as you are, but I've not seen currency that moves up that much and goes down that much within a very short time that much. I mean, it's really difficult, okay, to manage it. It's difficult. It's very challenging. And I'm happy that UBA MD is proposing. I'm not so sure that would be easy for you to manage it. I just want to tell you, because such fluctuation and such movement, I don't think there is anyone with a crystal ball how to handle it. I tell you, we spent at the board level yesterday almost 3 hours just discussing what should we do in order to handle this volatility in currency. There are many ideas, but no one has the crystal ball, and if anyone had it, he wouldn't have been sitting here, probably would have had much better life somewhere. Okay, but let's face it, we are trying our best, and we know that we'll manage it, and we are very optimistic for 2012. Thank you.